David, I
Thank you
love
for
the call.
clarifying that.
I love the call.
You loved it.
I'll tell you why.
Okay.
Because he said when you get to the April conference call, the
April Investor Day, April 11th.
you're going to like what we hear on all these different things. Now, right now, the stock was up $2 until he started talking about the second half not being strong. David, you said the other day that the second half would not be strong. Now, if these analysts have watched you rather than their spreadsheets, they would not have been so shocked about that. But the conference call had analysts talking about streaming, and then at a certain point, like Bob seemed like I'm done with the streaming questions already. You're boring the heck out of me with streaming. But David, I think that ESPN DirecTV, there was a fantastic question asked about is it going to be pro gambling, because it's that doesn't work with the Disney repartee.
Right.
You know what he said? I thought was really interesting. He said no, but I think it's going to be used by gamblers basically. And when you go on to ESPN Plus, like last night, there was a big trade. The Sixers made. Now, ESPN regular, it didn't really have the in-depth analysis. ESPN Plus, it was killer. So one of the things I think that they're doing is, I'm not saying they're making ESPN more superficial, but David, if you're a gambler and you want to gamble on the 76ers, I'm not allowed to gamble, but if you gamble on the 76ers, you need ESPN Plus. David, gambling is big.
Well, and it's moving into state by state by state in terms of sports, given that rule.
Iger's ahead of the posse on this. He's ahead of the posse.
Where of course, the focus is and the future is, and he said this on the call, the bet on the future of this business is in terms of their move to direct-to-consumer,
brand.
We're calling streaming.
Brand power.
And how they deploy their capital so that long-term growth, and again, I'm quoting here from Iger, of this company is stronger than it would have been without these investments.
Do you agree?
I don't necessarily agree. I think that you have to do this because your old business is going away, but the argument that your growth rate is actually going to be stronger than the old businesses is unclear to me. You have to do it, but it doesn't mean you're going to some promised land where growth is going to be even better.
How about the acquisition? How about Hulu mentioned multiple times?
Yeah, well, they're going to own 60% of Hulu. What do you do with it?
But Hulu's
spending a lot of money, but they're having some real success in signing people up for both their OTT platform and obviously their SVOD.
I came away thinking Hulu is actually the Trojan horse here. I think it's much more than I thought.
Yeah.
It's better. I think that Bob is bankable. I think that people are saying, you know what, we got to give him the day. No, he loves to talk about how
$150 million bucks goes away this year, most of it towards over the course of the year.
Thought it was going to be more.
From licensing fees that they'll no longer have. Marvel, I guess, is going to be the first one. There's a movie that they're not going to be giving to the streaming, to the SVOD services.
I was more worried about the giveaway to Netflix.
Well, the question still becomes, and this is where we're going to get a lot more clarity, I think, in April, how much is it all going to cost? Yes, you have to buy in some foreign rights. Yes, you're foregoing royalties or rights that you would be selling for some of these movies. And then you've got to increase potentially how much you're producing. My understanding is they're not going to have the volume of a Netflix. They're going to really go behind the brands, the key Disney brands, to be the key to why people are going to want it. But the question still will be, how many do you add year one? 3 million, 5 million? How quickly can you get anywhere near 100 million people? And how many years is that going to take? And will your shareholders be willing to sustain the margin decreases potentially as a result of more of that spending?
The April meeting is going to be very strong. They have to present some sort of delta, which says, listen, we're not other bets for Google. I use the Google because it's like yesterday it came back big. We're core business.
Right.
David and I don't know. The brand equity of Disney is going to be tested here.
Yeah, but if there's any company
that can do
that has deep brand equity and could do it,
that's why I'm encouraged. I think the brand equity here is going to tell the tale about what you'll pay in terms of price earnings multiple, just even if there's margin degradation. And I think we have to all wonder. I know when my kids, it was like, I had to remember when Bambi's mom, and that was a major crisis in my house.
And then the question is, if this new world, if you do have Disney along with Netflix and Amazon and Hulu to some extent and some others, what about all those other guys out there producing lots of content, relying on the old model?
No, they're dead.
Although what happens?
Viacom had a good quarter.
Viacom had a decent quarter, and the stock was up yesterday.
How about CBS? I don't know.
We'll see. We'll see.
But David, I think that look, you said if anybody can do it, it's Disney, and they can. I felt that a lot of the resources are going to be devoted toward Disney.com. And I told you that I think the 5 million people, 2 million people for over 5 months.
Yep.
But how much was that Ultimate Fight Club? I don't know how sustainable Ultimate Fight Club is. I just don't.
Right.
I mean, there's a lot of talk that it's not as sustainable as we think, but then there's a cohort that is just swears by the thing.